In this video, you're gonna learn what is an infinite banking system and how can you actually use it. So have you heard about an infinite banking system, but you're really not sure how to use it or what it is? Well, that's why we go into detail in this video is what is this infinite banking system and how can you best use it to grow your wealth fast? And in fact, not just down the road in the future, but even right now. Okay, so I want to first give shout out and credit to Nelson Nash, who's the godfather of the infinite banking system, right? The infinite banking concept, or IBC. Nelson Nash is the one that created this. His institute's the one that still talks about it to this day. You know, he passed away a few years back, but man, the system he created is revolutionary. And I'll tell you, I'd never heard about it myself. In fact, I was a financial advisor for 4 years, and when I realized that what I taught as a financial advisor, telling you to, buy term, invest the difference, or telling you to go and buy and invest in the stock market and do all those things, and hopefully you'll have a retirement someday. When I found out that wasn't really working, I started looking for other answers, things out in the outside alternative investment world. This is why I got into real estate. And while I started to find out that real estate investing was the way to go, all these real estate investors started talking about this infinite banking system. And I was like, what's this infinite banking system? They're like, you never heard of it? No. I was a financial advisor for 4 years, never heard of this. And they said, yeah, you use this whole life insurance. You use whole life insurance to do this. I said, whole life insurance, whole life? That's horrible. I mean, that thing pays you nothing. Now, personally, I didn't know anything about whole life insurance because my company never even offered it as an option. They just told everybody, hey, it's a piece of crap, don't even do it. So I didn't know anything about it, but I decided to go down the rabbit hole. I got the book by Nelson Nash called Become Your Own Banker, started to read that, was intrigued, because I thought, well, this is interesting. You pay yourself, that kind of stuff, right? And you buy cars with it and houses and everything else, and which is what they kind of teach. And as I started to learn about it, of course, somebody referred me to the guys that were like the specialists in my area in Utah. And I remember looking at the numbers. And the first time I saw those numbers, I said, wow, this thing's kind of expensive, especially up front. This is more expensive than even like other things like universal life, like I used to offer to my clients back in the day. And they said, yeah, it is, but it gets better down the road. Notice it gets cheaper as time goes on. But yeah, in those first few years, all of it goes to insurance costs. And I asked the agent, I said, couldn't I make this better? Like, could we pull some, levers or something like that on this to where we can get it to where I have more cash up front, less costs coming out? And the agent said, no, you can't. If you do, you'll get taxed. Well, I hate taxes, so let's not do that. So I said, all right, I'll just trust you, I'll go with it. Well, that was 2006. 2008 hits. We all know we went to this big global recession. I couldn't afford to keep paying the premiums. Even though I paid 25 grand into it over those couple years, still, I had no cash in there, zero, because it all went to the insurance cost. Now, I was upset I lost it, but I figured that was just what it had to be. But a few months later, I got ticked off because I realized the agent lied to me. I found out I could have actually done exactly what I asked him I could do, but he told me he couldn't. I actually ran my own numbers because I was still insurance licensed at the time. I ran my own numbers, did my own research, came back and I said, look, I can do all the things you can do, but I can have cash from day one. And he argued with me back and forth. And finally, he just said, Chris, I designed it that way because I couldn't afford to cut my commissions. I said, there's the truth, finally. And by the way, I'm never going to send you a referral friend or family member again. And I didn't. And so as a result, I started to find ways over the last 15 years to make it better. And so when you talk about this infinite banking system, there's a lot of different things they talk about using and leveraging. But just be aware that there's traditional infinite banking and there's lots of variations of it. So even when you see people talk about it, it's not always the same. This is why Dave Ramsey will rip on it, because even when he looks at it, it's not all the same. In fact, I would say that a lot of the infinite banking type stuff you see out there is at best okay, decent, but a lot of it's garbage. Okay, so this is coming from a guy who has more of an investment perspective, because I'm more of an investor and a business owner, but coming from that perspective, looking at this from fresh new eyes, saying, you know what, there's ways we could do this better. So anyways, just so you know, most people, they talk about infinite banking, the system that goes with it, it's really just churning your money over and over, right? The money that you're normally to invest in different things, the money you're gonna pay for like cars and houses and things like that, they're saying instead of paying the bank, pay to yourself. And instead of using your savings account, instead use this whole life insurance account that has this tax-free savings account inside of it. That's what they're talking about using. Not the death benefit, the cash value account, the one that I had nothing in after 2 years or so. And there are ways, of course, you can design it to where you have money from day one. Well, when they tell you to do that, they say, well, let's say you go buy a car. Rather than try to pay the bank the interest, they say, well, pay it back to yourself. This is kind of deceptive because the the real nuances of this is different because it's not that you pay yourself back interest. In fact, when you borrow the money from the life insurance company, they are charging you interest, right? And the reason they're giving you a line of credit is against your cash that's in there. So say you have $100,000 you've built in there, they say, well, great, I want to use $50,000 to go and buy a car. Well, rather than just withdrawing the money, which you can do with life insurance, you can withdraw the money out of the cash account. But of course, when you do that, you lose the ability to earn interest on that money. So instead, leave that full $100,000 in there, borrow $50,000 from them because they know they've got collateral over here because you have the money with them. They give you the $50,000. They'll charge you maybe like 6+% on that money. You go and buy that car. Now, what they'll tell you to do is make the payment back to yourself as if you're paying the bank. So say, put in a calculator, 5 years, I get charged 7% interest or whatever it might be at the bank. And they'll say the monthly payment on that $50,000 is going to be over $1,000 a month. You're like, cool. All right, I'm going to pay that $1,000 towards my insurance line of credit. And that's exactly what they want you to do. Why? Now, I'm saying this, you want to do it yourself because here's why it works. As you pay down that loan balance, what happens, you get charged less and less in interest. But over here, that $100,000 is still compounding and growing at about 6% or so, tax-free. So you're earning all this compounding interest over here, while as you're paying down that loan with that payment that you're already going to pay to the bank anyways, now you're paying it to a different bank called the insurance company. That's the part that's deceptive by many people. But as you're paying it down, of course, less and less gets charged interest. That's also true at the bank, by the way. Same exact interest. I had somebody who put millions into a policy try to argue with me saying, no. It's different interest. You pay compounding interest to the bank, simple interest to your life insurance. I said, no, it's simple interest both ways. They're both doing the same exact math. It's just math. They're just charging interest on the balance of your loan. For example, last year I was offered a 3.99% loan with a bank, with a financing institution on my car loan. I said, why would I pay 6.2% on my insurance company loan when I could get 3.99 over here? And in truth, even if they offer me 7% or so on that bank line of credit, that's cash that doesn't have to be leveraged out of my pocket. I can use my cash for other things or to keep making money. I'd rather just pay the bank the 7% because then at least it's their money I'm using and not my own. And I can use that money to invest and maybe make 10 or 12% a year. Does that make sense? So I can make more of that money elsewhere versus using my hard-earned cash, that I've already built up in here to say, let's go and just borrow it, borrow from the insurance company and have to pay them back. Now, granted, you don't have monthly payments from the insurance company. That is a benefit, right? Because they let you pay it back however, whenever you want. They do charge you daily interest. That totals to be over that 6% a year or so. But you pay it back however, whenever you want. The deadline for paying back the loan is your death. So rather than me trying to go and, never use the bank, I like to leverage the bank for low interest type of loans, mortgages, car loans, student loans. I'll use the bank all day long for that. But instead, I'll use my insurance company for the things that maybe they would charge me credit card rates for. Maybe something to invest in my business that I know I can generate a return from to then pay back that line of credit faster, which then just frees up the cash to use again to invest again, right? It's just like having this credit card, this open line of credit, and you can pay it down, use it up, pay it down. It's the same thing, but you're getting charged a lot less interest than you will with a credit card. And I don't have the monthly payments, and it doesn't show up on my credit report. And at the same time, I'm still earning interest from the insurance company on all of that money in there. So I'm still earning this tax-free interest while I'm trying to pay as little interest as I can, leveraging the life insurance loan with the insurance company. That's how infinite banking works, is picking up more dollars. So I can actually make money over here by netting more interest that they pay me versus what I pay them. And I still make money when I use this for investing, whether it be my business or doing real estate properties, whatever it might be. That's where I make the most money. That's why it makes sense for me. Now, I'll tell you, I was talking about this with another real estate investor on this podcast recently. It's actually about to air right now. And as I was talking to him about it, he's like, yeah, but I hear that, but is that worth all the hassle to try to pick up, maybe hundreds, thousands of dollars, tens of thousands of dollars more in interest? I said, well, if you're trying to use it every day, no, it's not worth it. Don't use it like a bill pay account. That's one of the myths you hear about there all the time. Do not do that. Plus, the insurance companies don't like it either. That's the thing that they'll actually tell the agent to tell you not to do, right? So they even tell the agent, don't sell it this way, or we might cancel your appointment with us if you try to sell it this way. So I agree with the insurance company. Do not do the whole bill pay thing. I only like to use it for larger purchases. It could be a large purchase like $10,000, $20,000. Could be something that like you could be buying a car with it. It could be investing in your business. It could be a down payment on a real estate property. But it's usually got to be something bigger that I'm not going to be using all the time, moving money in and out. I'm going to use all the cash out of my bank first because I get paid 0.0% at my bank. I might as well liquidate all that cash and get that money invested versus using the money that I'm making 6% on anyways inside my life insurance. So hopefully that makes sense. So I use that as like a last resort. I also store most of my cash reserves in there. And to like that other podcast host point, the thing that got him the most was that money is 100% protected from lawsuits of creditors in most states in the United States. For his state, that was true. And so I can have my money fully protected, have millions of dollars stored there, and even though people can sue me and they can get to my savings account, checking accounts, they can get to my IRAs, they can get to a lot of different stuff, but they cannot get to my life insurance cash value. That is protected. He said for that reason alone, he's like, I would just store money. I would even use it for this infinite banking concept. I would just store my liquid reserves there for emergencies as well as for just keeping money that I know nobody can get to. It's for me and my family or even for my businesses. He's like, I'm going to keep my money there. I said, that's the point. There's so many different ways you can use it, but for this infinite banking thing, or as we call it, the max ROI infinite banking strategy, we try to just get more cash, more bang for your buck, less costs coming out, more cash from day one. And by the way, usually our policies pay for themselves within 3 years. So they're already making more than what you're putting in. By the 5th year, you already have more cash than what you've paid into it. That's the beautiful thing, is that even though there's insurance costs, and yes, it can protect your family too, the great thing is I can have this access to this cash and use it much more freely than if I locked it up in a 401k where now it's trapped in prison. I can't use it for other things. That's why I use this infinite banking system to be able to help it work harder for me. So again, there's the traditional infinite banking system. I personally like the max ROI infinite banking type of system that we use. If you want to learn more about that, I would just go to moneyripples.com, click on infinite banking, and you can actually learn more and go deeper down this rabbit hole to learn how this actually works and how I've actually used it to create more wealth, as well as many of our clients too. So go check that out right now.